So real estate investing is not passive. Even if you're not getting into developing or renovating units, even just buying buildings, it's not passive. You're dealing with people, and a house is 4 million pieces, maybe more, and they break and they leak, and even if you have the perfect tenants, you can't help that there's a hurricane outside. And it's your responsibility. So you need to be all over it. And the guys who succeed are the ones that don't take no for an answer and don't look at any issues. They're like, oh, well, there's an enviro. That's what screwed me. It's like, no, you now need to be like, okay, well, then get out there and dig, call 10 enviro companies, find a solution, get around it. That's the game. So there's a ton of inherent risk associated with it. Hey everyone, thanks for tuning into the Canadian Private Lenders Podcast, a show covering the private lending industry, the mortgage broker space, and the Canadian economy. Your hosts are Neal and Ryan and Ryan McNeil. Enjoy.
All right, everybody, welcome back. It's episode 88 of the Canadian Private Lenders Podcast with your hosts, Ryan and Neal. Neal, how's it going today, buddy?
Good. I was just saying to you, I'm a little tired because I'm running a calorie deficit in preparation for a trip I'm going on.
You're fading away, buddy.
Fading away to nothing.
What's a calorie deficit for Neal and Ryan, if you don't mind sharing?
Yesterday, I probably had like 1,500 calories.
Wow. That's tough.
I feel very tired right now.
Tough, yeah.
Like I need this coffee. I'm like, why am I so
You can
tired?
see it already, actually. It's kind of crazy.
It's like by the face. Right?
Yeah.
This
morning,
morning,
I guess, if that's what you want.
I've been at it for whatever, probably like probably about a week.
Yeah.
But it's funny, I was talking to a guy, and he's like, man, it seems like the modern style now for guys is just to look dehydrated. He's like, you're not even like skinny now, you're just dehydrated. I was like, that's
that water deficit. That'll be the new thing.
Yeah. Jesus.
So today we're going to dive into something a little different. We're going to kind of pivot away from lending today and talk about something I know Neal's super passionate about. You know, a lot of Neal's following from his past podcast would have been very much focused in the space, but we're going to touch on our real estate investment portfolios. So
Jesus.
I'm nowhere near the level that Neal is, but that's okay. And we're just going to kind of touch on why we invest in real estate, some of the wins we've had, some of the losses and lessons learned. But let's jump right into it. So, Neal, anything you want to add off the top here? Or
no, some of you guys may have heard this before if you listened to the previous pod. But yeah, I'm happy to share my experience, my reason why I did it, what I've done, what I have, why I'm doing what I'm doing now. So
yeah, absolutely. And you know, a big reason why we're doing this, you know, obviously it's, you know, real estate adjacent to the lending space, but, you know, both of us are passionate about this, and, you know, it's a primary borrower that we would target in our private lending portfolio as well, the real estate investor. We talk about it all the time. So we're going to go in depth on that. So let's dive right into it. So do you want to kick off with yours? I think that's probably maybe more interesting.
A little
off the top.
or long-winded,
That's
but I'm
okay.
happy to get into it.
No worries.
So yeah, I guess, so I'll pretend like no one knows and hasn't heard the backstory before for me, but basically from a young age, this actually, honestly, it's kind of funny, but I feel like cars are the motivating factor for all things that I've ever done.
I'll be able to buy fancy cars.
To be able to buy fancy, fast cars.
Fast cars.
So yeah, so I remember wanting that and just trying to figure out how to afford that. And so I got into a bunch of different small businesses because I got a job and I was working 80 hours a week, minimum wage job. And I remember getting my paycheck and being like $746 after 2 weeks of trading my entire life. Like there's no path forward to having the things that I want. Mm-hmm. So then I went down this path of trying a million different things. I did landscaping, I did driveway sealing, I did aeration, I did construction work. And then it just kind of went from there. I was flipping all sorts of things on Kijiji. I was flipping car parts, and I started flipping car products. And then I started flipping cars. And it was just kind of a progressional item. And I was like, well, what's the next stage now? I've put together a bit of cash this whole time. This is over the course of probably 3 to 4 years, maybe even 5 years. And the next step was real estate, really. I was just like, okay, it makes sense. It's the next bigger flip. And so I had the cash to be able to get into a down payment. So yeah, so I did. And my first one, I didn't have proper income to do it. So I did it with 2 other partners. They had income and the other part of the down payment. And so we bought into real estate. And I didn't know anything. I just knew that there was people who had these giant buildings and these giant portfolios worth hundreds of millions, if not billions of dollars, that spit out tons of cash. And I was so green. I just considered like the standard compounding thing of like, okay, we're going to buy this house and then that adds $800 a month cash flow to my baseline. I'm going to save up for my next down payment and then do that. And then that's going to add on. I'm going to keep doing it. And I don't think at the time that there was as much openness on the internet. Like at the time, the only thing that was available to me in an education basis was, not only thing, but on average, was a lot of these like seminars where it's like a famous person from TLC's coming to your town, and you go to a hotel and they're trying to upsell you on
Cardone wannabe type thing.
It's all the Grant Cardone courses, and they're trying to squeeze you. And so like it was really hard, and I was very frugal. Like I would never pay for one of those courses, so I never joined one. So I was very green. I had no idea what I was doing. Anyways, we bought a duplex in West End, Halifax for $270K. And at that time, the rental market was not hot. Like trying to rent the upstairs main house, it was like a 4-bedroom, 3-bath upstairs in the main house for maybe $1,800 took months and months. And I'd be doing viewings and begging people and incentives and all that kind of stuff, including utilities. Yeah, I think utilities included $1,800, 4-bedroom, 3-bath, parking, garage, the whole works, a yard. Anyways, finally got it rented, and that tenant completely hosed us. Like, didn't pay rent. They gave us all checks. First check cashed, never another check that would cash. Wow. And I would go banging on the door, and I was scared. I didn't know what I was doing. And I would see them walk around the house, and I'd be banging on the door, and they wouldn't come to the door.
Wow.
And they just kept ignoring us. And so they piled up a big rack of debt. And eventually one day I just stood there, and I banged on the door for like 2 hours until they finally came. I could just see them. They were just looking at me, and I'm just smacking on the door, and I just wouldn't stop. Anyways, they were like, okay, fine, we're going to leave. So they ended up leaving within a couple of weeks. They stole my appliances. They did everything. Damaged the place, made a mess of it. We didn't get rent, all this kind of stuff.
I can't believe you continued investing after that.
So yeah, this was the thing. Like every screw up I did right off the hop, I was like, there's got to be a way. There's got to be a way forward. So anyways, I then ultimately went and bought some foreclosures and flipped those. I had good success on that. And I have some stories on that as well, but we don't have time for all the stories. But the big one that really changed the game, and it's a local investor here in town that we work with, that also kind of brought my attention to it, was property near the university I was going to came up for sale. And it was 700 one day. And then within 24 hours, it was like 500. And then within another 6 hours, it was 350. Like they were just, for whatever reason, were dropping the price like crazy. And so I went in, I made the bid. I left class. Like, I need to go see this place.
Yeah.
Couldn't get into the property, but made the bid because the location was right next to the university. And then someone else that I bid against ended up reaching out, touching base, and saying, let's partner on it. And I said, okay, because I don't know what I'm doing. So he helped me convert it from a single family home to a triplex.
Cool.
And so we paid for all the renos out of our pocket. And then I didn't know what to do with it. I was like, okay, great. Now it's rented for whatever, $5,000 a month. My mortgage payment's $1,800. And I'm making all this cash flow. Sweet. And he's like, well, you should go to the bank and maybe see what they think it's worth. Partially because he wanted to get bought out. So he's like, you need to buy my equity out. Sure. And I'm like, well, I don't have the money to do that. And I don't know what it's worth. So he's like, let's get it appraised. And so we ended up getting it appraised. And I bought it for $350. Like I said, we paid whatever. We spent 50, 60 grand cutting it up. It appraised out for $1 million.
Wow.
Right. Well, actually at the time, 880. So then I didn't, and then the bank's like, yeah, we'll lend 80% on that. And so they then cut me a check for all this money. So after I paid him out and everything, I'm sitting there with like 200 grand cash.
Changed your life, no doubt.
Completely changed my life. I'm still in university at this point, and it's still cash flows because the time rates were low, everything was solid, the systems made sense. And like that was 880 at like a 8 cap, right? Like that's when they weren't stretching the numbers. And I was like, oh my God, so this is how this works.
Right.
And then the whole thing made sense to me. I was like, oh, okay, so these guys are finding undervalued places, cleaning them up, adding value, and then pulling the money out and rolling it forward. And then you get these huge wins. The good thing is the timing of that happened were perfect timing. It happened in my final year of engineering when everyone was getting jobs. And if I hadn't have gotten that, I would have applied for a job. And I feel like it would have definitely slowed down my progression.
For sure.
It would have been great learning for a lot of different things. It's hard to get out of that. Once you get into a system of like biweekly paycheck and a life built around a steady income stream, to then jump away from that is the scariest thing. Like, again,
I'm always blown away at your decision to do that, because there's so much pressure, especially in engineering and having gone through school, you know, from parents, professors, your colleagues there, you know, the other students, to go out and get that job paying, you know, 60 grand a year or whatever, and you start collecting that biweekly paycheck and move if you need to Ontario or Alberta or BC, right? Or go work in the territories for a couple of years, or Northern Newfoundland, right? Or in the mines, right? Like, it's just crazy that you were able to not give into that pressure. And maybe it was just the timing of the deal too, right? And you saw like a light bulb went off and you saw an opportunity.
It's a mix. And I appreciate you saying that, because, and it makes me feel proud now. I'm finally trying to take acceptance for some of the things that I did, but it was such a hard time in the sense that everyone around me is getting jobs. Mm-hmm. And that's all the chatters. And your final year, 5th year of engineering, nothing else matters. Like, it's school works out the window at that point. Basically, all everyone's just talking about is
what's next,
what job openings are up, who got what job, who's in what interview round, like all that crap. And so that was all the chatter. And then once anyone signed a job, then they were just completely checked out. So like, I don't care anymore. Like, I've already got my job. As long as I get 51, I'm out of here. So that was going on. People are bold too. Other students and my friends and stuff would be like, what are you doing? Because I was like, I'm not applying for jobs. I wouldn't open the job portals. Like, I won't even look at it. I was like adamant. And like, are you like, okay? Like, are you losing your mind? And I was like, I know if I take a job, I don't know if I have the heart to be able to leave. Whatever I do, I cannot take this job. And then both my parents sat down with me separately to be like,
that would be the toughest conversation.
Are you unwell?
Yeah.
And that was a tough conversation. And I know they were scared. And they weren't doing it because they're just trying to look out for me, right? Like, it seems I was doing a crazy move. And then I also owe some credit to a friend in the real estate world, Craig Snow. I don't think he'll ever listen to this, but he's been on the other pods before. Mm-hmm. He owns the Remax Nova brokerage here. And he was hard on me. He's like, Neal, like, do not, like, come join Remax, which, again, he was pushing for me to be an agent, which I thought was crazy at the time. But he was like, you can do more. You can do more. Go do something. You can do more. And it was a bit of a Wolf of Wall Street scene because I was at his house and he was like, Neal, like, get your license. And I'm like, no. He goes, come to my office. And he showed me his pay stub for that year. And I was like, damn, all right, I'm getting my real estate license. So it was a kind of a perfect storm of all those things that happened to allow me to feel comfortable in doing it. But I was scared for my life.
Yeah.
At the same time, that's what gave me the motivation to work my ass off. So I ended up getting my real estate license the day I graduated. I left my last exam. I drove to the real estate board, signed up for the exam there. Yeah. Got that done in a week, really fortunately, and started selling real estate and focusing on my portfolio. At the same time, that $200,000 I told you guys that I made, I lost all of it. I bought Bitcoin. I made short-term loans. I bought a franchise. Burnt my shirt on every single thing that I touched.
Stuck to what works, Neal.
100%.
Yeah.
And then I crawled back. I ran out of money and was scraping by. Like, I was literally living off my credit card, living in a small duplex house with my partner at the time. And this is where things then turned again, as I found a building that would actually caught on fire. I saw the news article that it caught on fire on Christmas Eve. And I went, looked it up because it's all public record. I found the owner. It was an 11-unit building. I went to her home and we had a conversation about it. And I coached her through the insurance process because I had learned that in my franchise ownership because we do insurance work. That's a whole other story. But long story short, she got what she wanted out of the insurance, what was deserving. But it also left an opportunity that she was willing to give me the building at a very good rate. And so I put it under contract with her. And I was kind of dragging it out because I couldn't get financing because I now have no money. I've been working as a realtor for 6 months maybe, which means I also have making no money. And yeah, I had no background. I had basically very limited assets. I owned a couple houses. And so she ended up being like, okay, well, how about this? I'll give you a big vendor note and then we can see what we can do. So she was like, I'll give you a vendor note for 85% of the purchase price. And at the same time, we got it appraised. She was giving me such a good deal that it actually appraised at double what I was paying. And then that's when I was introduced to Ryan actually in this deal. And basically it was good asset in a good location, fully vacant, valued at way more than what I was paying. And so then Ryan's company at the time, Graysbrook, took a flyer to basically give me the first little bit to get the reno going. But again, there was so much equity. Like you guys gave me $50,000 to start the reno.
What were we thinking?
Hey, and you guys would have been still at like 40% loan to value.
Yeah, for sure.
On a finish, on like a full building. Anyways, so I started that, and at the time, rentals were cheap, but it would be get up in the morning at 6, go meet all the guys on site at 7, go to Kent, and then I'd sell real estate all day, and then go back to Kent at like 7 or 8 to buy all the remaining stuff that they needed and just get into the cycle. And I got burnt a bunch of times because I was brand new to everything.
Sure.
And so I burned through 1 million contractors trying to find good people. But
being taken advantage of, you mean, as well? Or just people just taking you seriously and not showing up?
All of the above.
Okay.
Being taken advantage of, like people giving me prices thinking like I didn't know what shit was worth, so they're screwing me, or like the way they write the contracts, like, oh yeah, we didn't include that you have to do all this with all your tubs. And I'm like, well, you knew I needed tubs, and why is this like? And then I'm like, look at the other quote, and they had it included, and I'm like, I didn't know that this like valve setup made a difference.
Yeah.
So there's that electrical stuff, and then materials too, like pricing. So there was it was a sharp learning curve on all of it, but I was very heavily integrated. Like I was going there and literally lifting the materials in. I was going there and being involved in the process. And then that was when the growth in rents was starting to take place. And so by the end of the project, what we estimated the end value to be, it was actually up another 50% or so. Rates were so low. I went to CMHC. They're handing money on left, right, and center. Got approved. Got full 85% takeout. Yeah, that levered me into having probably $750,000 cash.
Life was good back then, eh?
Life was great.
So was that 2019 or were we into COVID by that time?
Would have been into COVID.
Yeah, for sure. Yeah, maybe even 2021 now that I think about it. But
The refi that pulled you guys out would have been 2021. And then I ended up levering that to basically buy all the buildings on the street. So I bought 6 more properties on the street. And then at the same time...
Is it named Andrino Drive now?
I want... That's always a thing on my list is a make a street.
Don't do it there at least.
No, not there. Yeah. But yeah, so I bought all the buildings on the street, utilizing that equity and then following the same principle. At the time, the rental market wasn't as tight. So I'm not super proud of what I did, but I didn't formally do renovictions. All of my tenants we had negotiations with. So we'd go in and say, hey, look, this is what we intend to do.
Right.
Most of those buildings were half empty when I bought them anyways. Like at that time, rental market wasn't as tight, and those buildings were so clapped out that they were like boarded up windows, boarded up doors. A couple of them I bought, the front and back doors have screws through them because they couldn't lock them and keep people out.
Wow.
And it's because you had drug dealers who had built their operations in the basements of the buildings. We were pulling handfuls of needles out of the walls. Like that first one you guys did?
Yeah.
We literally had bags of needles coming out of it.
Ugh.
Anyways, another side story I'm going to quickly tell is when I pulled onto that street that very first time to see that building, a guy ran in front of my car sprinting up the street, and then chasing him was another guy with a big butcher knife. I was like, what am I doing right now? Is this the right play?
Sketch.
Anyways, all to say, I leveraged that equity, and at the same time, I also opened a GPLP, and I took on, fortunately, just one investor, and he basically lent me about $1 million, and we went out and bought a couple buildings as well. So I had the two of them going at the same time. I had my own portfolio growing, his portfolio, and about a span of 24 to 30 months, I probably accumulated about 100 doors.
Yeah.
And we gutted and rented them all top to bottom. Nothing didn't get turned over. Bought a few small development sites as well. And then I just stopped buying because the numbers to me just started getting squeezed. By that point in that 30 months, the cat was out of the bag.
Yeah.
Rental growth had become, we were in this housing shortage, and prices like I was paying, I averaged out at like probably 75 a door is what I paid for everything.
Wow.
Maybe 80 a door.
Sure.
And then within that 24 months, it was up to 200 a door.
Yeah.
And there was no lift left. And so I wasn't prepared to operate the business. I knew how I like to operate the business, and it's not where it's like razor thin margins.
Yeah.
And so then I started to pump the brakes a little bit and just finish up the projects, clean things up. I ran into some huge environmental issues on one of my personal sites, which cost me a few $1 million, but probably about $1 million directly, and then the loss indirectly would be millions. So that was a huge learning experience, and that also pumped the brakes on it for me.
Yeah.
So I lost a lot of deals in that process. But again, it's almost a blessing in disguise, because when that Enviro hit, I had 3 properties under contract, firm contract already to buy. And I was paying more than I'd ever paid. And I'm glad I didn't buy them, because at that time, then the tenancy rules changed. So vacating the buildings would have been impossible. The end values would not have been where they need to be. Rents would not have been where they need to be. And so it would have been like super tight, just like make work type projects. And I'm glad I didn't get involved.
So you bailed on those.
So I ended up bailing on those, losing all my deposits.
Yeah.
And so I lost a lot of money in that process. Like that was a couple $100,000 between deposits and work I had spent on those preparing to close.
Yeah.
But yeah, so anyway, so all that happened, finished up the 100, and then just started to see where I felt things were going. So I saw a couple assets that I had finished originally that had a bunch of equity, that it made sense for me to sell them, because I had run such huge losses in my holding companies due to all the capital improvements, that I was able to sell those buildings without having any sort of taxable implications.
Nice.
And so I could take out an extra 15-20% on these buildings, because people were paying full sticker. So I was like, you know what, I'll take them. Like, I don't love these assets. I'll take the money off the table. And so I did. And it was a great opportunity to pay down a bunch of debt, clear a bunch of cash, and kind of reshore up my portfolio.
Yep.
And so that's where I'm at now. I have about 75 doors. I have a few small development sites. I'm still actively shopping, but the numbers have to make sense. And I say this to everyone, like, if I have to go in there and there's 6 other bids and I'm fighting and beating and all this kind of crap, and I keep slowly upping my number, like, I'm not really that horny to do it. Like, I don't need it. I mean, if you focus on getting home runs, you have a lot more leeway to be a little loose with it. Like, I don't want to be in such a tight position all the time. So
for sure,
that's kind of how that whole world went, but that's where I'm at.
Awesome. That's great. So I'll quickly go through mine here as well, but I have a couple quick questions for you here, and we'll start moving through things because I know we're going a little long today, but just want to know, Neal, what is your goal at this point with real estate investing?
So my goal with real estate investing, I have a couple, just like, it's funny, my whole life is like these things that I've built over time. So there's a couple like itemized goals. So a couple of them was like, we said it jokingly, but like have a street. Like literally, I'd like to develop a street or some sort of neighborhood and be able to name a street and also create a neighborhood that I think is what's supposed to be. I've always wanted to own an apartment building, like a real apartment building that's like 30 stories.
Sure.
So I really want to have a core asset like that at some point. And I think I've started to add in there that I'd like to have some sort of hotel restaurant set up as an experience-based place where I can create something that I feel like this is what the experience is supposed to be like. That's a more recent one. But those were the two main things when I started out. the continuation of where things are going for me now is I realize I don't love operating the buildings. I don't love operating the business. It's very tough. Like I had in that whole history there, I had a property management company. I went through multiple staff. I ended up closing it down and going to third party because I just couldn't manage it all effectively. And so my investment perspective is I want to continue to invest, but I also need to realize like that portfolio, because I'm not actively working it anymore and I'm not going to be in there physically developing and turning units over or building more units. It's not a business for me. So I have to look at it as an investment portfolio. And my focus would be on more development potential in land than just unit growth. But it'll be a mix. I think I'll continue to acquire units when it makes sense and land when it makes sense. Again, I want the market to be in a place where people want to sell and be creative and need to sell.
Yeah.
Not so I can take advantage of them, but it's just much easier to negotiate with. As a seller, I try not to be this person either where I'm like, this is my number. I don't give a shit. I'm not helping you out at all. Like, all of the shit that I've sold, I've done vendor takebacks. Yep. I've sold under appraisal. Because I'm just like, I'm trying, and I'm being creative, and I might work with them. If something comes up, I discount the price. I think that's a good way to be. I don't like this hard energy that everyone carries, and so I'm waiting for that to come back around. So my overall goal is to continue to increase the portfolio in Canada. I'd like to break into the States. I've been watching that a lot. Both marketplaces to me are in a weird world just because we don't know what's about to happen. Mm-hmm. And so I don't feel comfortable jumping in. And I know a lot of people are like, well, if you sit on sidelines, you're going to miss the opportunities. And that very well could be the case. I think about it all the time. But yeah, so I'd like to continue to grow the portfolio and have a couple major assets, which would be like a neighborhood and a giant building.
Very cool. Real quick, what is your favorite deal you've done to date?
I think my favorite deal is honestly probably that 11-unit building I bought off that lady for a bunch of reasons. First being how I found it. I'm really proud of that. And it's weird how the world works. Like I got into insurance work by no means other than like I bought a franchise from a recommendation from a friend. We partnered on it. And so I had to learn all that business. So then I was actually looking for insurance work. I came across this building and I was able to coach her into it. And so that allowed me to get that building for a great deal. So like that was really cool. That like it was from a news article from me fire chasing, and then I went to her house and ironed it all out. So that part I loved. Then building a relationship with her, and so then her lending me the money to basically buy her building from her. I enjoyed learning private. I ended up meeting you through that as well. So
That's how this all started, really. Exactly. That one, yeah.
Literally,
I was hoping that was going to be your answer. Otherwise, you're fired.
I met you and Zach, which was like amazing as well. I just learned so much in that process.
Right.
And then it was such a huge win on top of that. Like I can say, I mean, it's a public record. You can look it up, but I bought that building for $325, and then I just recently sold it for $2.75 million.
Yeah.
Like it was such a huge win for me. It completely changed my life in so many different ways that, yeah, I think that was definitely my favorite deal. Just learning. I learned everything. Trial by fire, pun intended.
Yeah.
Like,
amazing.
So
that's awesome. Let me quickly run through mine. It won't be as glamorous as your portfolio, Neal, but much more. Well, there's ups and downs, I guess. So, much more recent into real estate investing. It was never really a focus of mine. Obviously, I'm about 10 years older than you, and it just really wasn't even a thought when I was in university. I'd rent my college place and whatever. And, I would think about it at the time, like, oh, I'm paying $400 a month in rent. Like, I wonder how much this guy's got left on his mortgage, right? But I didn't even clue into the fact that, owning those buildings was like an opportunity to create wealth in the long term, right? So it ended up being during COVID, just before we started Keystone, actually, when I ended up creating a business with my dad and my brother. My dad had a couple of real estate investments, but he wasn't seriously into it either, despite, spending a long time in the lending space as well. But we are very much focused on the Moncton market in New Brunswick. And that's where I grew up. That's where both of them are still based. So they actively manage the portfolio. And right now we've got 4 buildings. So all of them are over under duplexes. So basically 8 doors in total. I think we started buying in early 2022. And we just got our most recent one this year, all in the same general area in Moncton. And yeah, we've been buying them at basically market value or maybe just below market value, doing minor cosmetic upgrades and then renting them out. That's been the goal, is to kind of get renters in there as quickly as possible, get long-term tenants and cash flow. And I'd say New Brunswick's one of those markets that still does cash flow. Like it's pretty tight where we're at right now with where rates are at right now. But it does still cash flow versus most markets like here, Toronto, we've done some investigating there, BC. There's no chance you're cash flow.
Even at the discounted prices.
Even at the discounted prices, right? So, and even in Airbnb scenarios, if you're Airbnb, which we've recently looked into. So we are still cash flowing there, which is great. And that's, kind of the key principle of the business. We've explored different things as far as, building a multi-unit. We've explored acquiring bigger multi-units, 6 units, 12 units. The numbers just haven't made sense on those to this point. the numbers have made sense in what we're doing. So we're probably going to just at this point continue actively pursuing that in the greater Moncton area. Super bullish on the market. Obviously, you and I talk about it all the time with each other, but the price points in New Brunswick, like the price points in Atlantic Canada are, close to 50% cheaper than the average Canadian price.
Yep.
The price points in New Brunswick are probably 30-40% than the, versus Halifax at least, right?
Sorry.
So, not to say that means it's going to appreciate, but people look at that value relative to other areas in the country, right? And take that under consideration. So it feels like there's further upside to New Brunswick. Again, the investment thesis is not based on price appreciation. It's based on cash flowing properties. So again, we've got those 8 doors right now. We'll continue growing it. I'd like to get to maybe like 20 doors. I think that would be like an ideal space. Any more than that, as it's managing a full-time business. So my brother managed the properties for us for a while, and he still actively continues to do so. But we will see if we get any bigger, if that continues, or we hire someone externally. Yeah. So that's where we're at right now. What are your thoughts?
It's good. It's good.
Yeah.
You're growing your portfolio to your point. You're buying in a place where I think there's a lot more opportunity. And I think the submarkets are where it's at. It's funny. I was doing a deal or working on a deal right now. The cap rate applied. I was like, oh, it's a little aggressive for a submarket. And he's like, well, it is. But it's funny. And I'm thinking it, and every investor's thinking it, is the submarkets have less downside potential than these main markets because everybody goes and builds and builds and builds in the big markets. And they get overbuilt. And that's what you're seeing in all these big markets right now. And Halifax kind of broke into being maybe a big market in this last wave. So, I think what you're doing is exciting. And it's to your point, 20 is like a really nice base. And like you think, okay, well, that very quickly is like, okay, that's $5 to $10 million. Like it's no joke. Like it's a very serious investment pool, and it can very much change the whole trajectory of your life and the family's wealth. So like it's a good place to be in. And you also don't want to be overly exposed. I think a lot of Canadians, I know myself, am very overly exposed to just one industry.
Right. Yeah, no, I'm glad you mentioned that, Neal, because I don't put it on my resume that I'm a real estate investor, but sometimes you think about it and just like, oh, well, like I understand this because I've done a couple deals here and there and plan to continue to do so. And I do like our strategy of pursuing, it's essentially single family properties, right? Like they have 2 doors, but you could easily convert it into a single family property if you wanted to, right? It doesn't make sense from a cash flow perspective, but that's an opportunity. It was actually funny because I met with your business partner and your other business, Chandler, a couple years ago, and he's obviously, I'd say, somewhat similar portfolio to you in terms of, he's got multi-units and he's done some of the big renovations.
Yep.
And he said if he could go back, I remember him saying this to me at the time, if he could go back, he would pick off like 15, 20 single family properties and go at it that way. Yeah. Right. So, and I mean, the market's changed a bit since then too. It costs a lot more to get into most of these single family, but that always kind of stuck with me. And that's kind of been a bit of our strategy.
It's smart. There's more price appreciation available in single families and duplexes for a bunch of different reasons. Potentially with the duplexes, what style they are, they can be split and sold as 2 singles.
Yep.
But a lot of times they can be sold to a young couple moving in. And so you get the growth of the general leverage and income in the world versus rent is what dictates the value of the multi-unit buildings, and rent really only does not appreciate as fast as actual assets that people own. So
one thing I forgot to mention too, Neal, is that 2 of our properties are neighboring properties as well. And it's near like a pretty major street as well. So not to say that there would be development opportunities in the long term, but you never know. You never know, right?
And it's always smart to pick them off together like that.
Exactly. And we ended up, looking back, we probably overpaid for the second one. I think the guy kind of knew we really wanted it and had that leverage, and the market was hot at the time. And it has been, the basement of that one's been a challenge, to say the least. But anyways, it was, we're learning as we go.
100%. And I think that's a very good way of handling it. Again, the way I did it only worked because of what my situation was.
For sure. Neal, just in the sake of time here, do we want to quickly run through, I don't think we have to go through our whole list here, but is there any reasons you want to share as to why you invest in real estate?
As I mentioned, there is Craig Snow. That was a big part of me getting into real estate. Yeah. Obviously, Ryan and Zach are a big part of me getting into real estate. Blake Wilson, Jody Comeau. That's the other thing I learned from that first deal was for going through the CMHC process, learning that, getting involved with them. The First National team has been amazing for me. Blake Upham at CBRE, Jeff Codier. I met all of these guys on that first deal, and they've all coached me. Blake Upham's been huge. Jeff's been huge. Yeah. So shout out to all of you guys. If any of you are listening, I genuinely learned everything from you guys. I'm sure there's some people that I'm missing right now on the top of my head that I'm trying to think quickly. Anyways, it took a team to get there, and that's a big part of this is you need to have the right team of people around you to grow yourself. It's not just a you versus the world type situation.
Yeah, absolutely. We got to get Blake back on the podcast, actually. I think we're time to get the big man in here and talk private again.
We do. And so to your point, asking about why I did this, I was on just an obsessive path of wealth creation. I tell this story to a lot of people now because I'm definitely going through a transition a bit in a sense where I came into my 20s and I knew I wanted to be in business. I wanted to create something. I wanted to be creative and I wanted to grow a business that had an impact on the world. Do I think I've done that now? I haven't. I've simply made an investment portfolio that allowed me to live a certain lifestyle. And that was because when I was in my early 20s, I made the decision of, am I willing to risk going through my 20s, chasing the dream, but potentially not achieving it and living a certain style of life? Or do I see this immediate opportunity available, which is Canadian real estate? And the couple things in there was like, I looked at the Forbes list. 30% of Forbes list people have real estate as the reason why they're on there. The GDP of Canada, 40% of it, it's like directly real estate. Indirectly, it's probably 65, 70%. So I was like, okay, so these factors are telling me that I should probably get into real estate. I know if I do this, not I know, but I feel fairly confident if I do this, I'll be able to live a certain type of lifestyle in my 20s. And so I chose to do that to allow myself to build a set pocket of wealth and then revisit my actual true dreams in the future. And so that's kind of what I'm trying to do now.
Very cool. You already highlighted some big wins. I wouldn't say I've had necessarily any big wins in my family's portfolio yet, but just kind of slow and steady. Is there any big wins you wanted to share? I know you kind of touched on it already.
Yeah, I mean,
the one you just mentioned.
Yeah, so I mean, the first one was that single family to triplex, like buying it for $350, turning it into a $900,000 property. Like that really sparked the whole game for me. The next one was, and that now that $900,000 property has been turned into a development site. So it's likely worth maybe $3 million. So that was a huge win. And then same with that 11 unit that I talked about, like that went from $300K to $3 million basically. Another massive win. Then the following properties I would say were all good and good wins, but they didn't really weren't huge game changers. So I'd say those are the two that really stick out. Yeah.
Okay. So for challenges and risks, so I know, you've talked about the environmental issue you had in the past and that, being a burning hole, a burning hole in the ground and a burning hole in your pocket, no doubt.
Yeah.
I think we've gone through that already. But one question I wanted to ask you on challenges, talk about the mental toll and the time commitment and the fact that people say real estate investing is passive.
So real estate investing is not passive, even if you're not getting into developing or renovating units, even just buying buildings, it's not passive. You're dealing with people, and a house is 4 million pieces, maybe more, and they break and they leak. And even if you have the perfect tenants, you can't help that there's a hurricane outside. Like it is what it is. So it's not passive, not at all. The challenges and the time commitment, when I was in that growth mode, like I told you, I was literally getting up going 6 till 11 p.m. every single day. And I was giving up everything else in my life to the point of like the boys' trips, all those things. I skipped all of them. I used to try and tell people, like, to put it in perspective, I had beer in my fridge going bad because I literally just never went out. I never drank anything. I had to save every penny I had. I was living off my credit cards, even though I had these assets. Like, it was just like, I remember I was collecting the change and depositing that. Like, that was part of like my monthly statement is I needed that change. So like it took everything to make it work. And so just, that was kind of the sacrifice that went into it. And my partner at the time, she was a part of it. She worked hard. Like she was very valuable as well. And she supported me in that process. So it's a thing that you and whoever's in your life needs to be a part of and prepared to handle. If you want to grow it fast and you want to be aggressive, there's a lot of risk associated with it too. It's the last point that I'll make is you can't, like, these projects don't turn over overnight. So you don't know what it's going to look like in 6, 12, 18, 24 months when you're done a project. And if you're not experienced, like, you can get approvals. Like everyone's afraid they can't get a loan to decide. There's someone out there that'll probably do it for you because they're in the business of doing loans. But like if you don't know what you're doing, you're not a good operator and you don't know how to get out of this, it's still your responsibility. And I also learned that kind of the hard way in some sense where a couple of times I felt like I got left out to dry. I'm like, what the hell? You put me into this. Now you're not getting me out of it. And it's your responsibility. So you need to be all over it. And the guys who succeed are the ones that don't take no for an answer and don't look at any issues. They're like, oh, well, there's an enviro. That's what screwed me. It's like, no, you now need to be like, okay, well, then get out there and dig, call 10 enviro companies, find a solution, get around it. That's the game. So there's a ton of inherent risk associated with it. And now we're seeing kind of what that risk looks like. Rents are going down. Vacancies creeping.
Yeah.
You got to be prepared
to have your fundamentals in place.
Yeah.
Okay. Just as we wrap up here, Neal, want to talk about some lessons you've learned. Yep. Maybe touch on being picky about the partners you work with.
Yep.
And maybe touch on having a safety net with reserve funds.
So first I'll touch on partners. I've done a lot of different things, whether it's real estate investing or other businesses and partners. And it's funny, my first lawyer said this to me and I was like, nah, it doesn't make sense. He's like, if the partnership's going to blow up, it's when the partnership's going to blow up. He's like, there's always a point in time when the partnership's going to end. It doesn't mean it has to be the end of the world when it ends, but you want to be prepared. So when it does come, if it's just someone gets paid out or whatever it is, you need to be clear with it. So no matter how good of friends you are, including family, it will at some point take a turn because someone's going to be doing something different than the other person. My biggest suggestion with partnerships, obviously, is do your best to vet a good partner. Follow your gut instinct. If your gut doesn't feel good, everyone's heard that a million times. The one that I don't think gets said enough is don't do any favors. This is the thing that everyone makes a mistake on. They're like, well, I'm here, so I just manage it. Like, that's kind of my shtick. And then he just kind of like invests the money. And I'm like, no. Like, you need to have this very explicitly written out. And you need to put dollar values on everything. So your time might be $40 an hour. That needs to go in there. If it's included as part of your position, you say, Neal's time is $40 an hour for property management plus 3% of the rental increase. For the first 5 years, Neal's including all property management services, X, it's these 5 things, for that period of time. And it needs to be written out because the second you start doing favors, you're like, well, like I threw this in for him and he's not really doing that in return. And it'll at least start to degrade your guys' relationship and cause issues. So no favors, everything written out. There always has to be dollar values. There always has to be all of that lined up. So that's my biggest tip with partnerships.
Have the contract in place is what you're saying.
Have the contract in place and just outline everything.
Yeah.
No free anything. Doesn't matter if you own an excavator and you're like, yeah, we just use it once in a while. Nope. That's got to be worth $250 an hour.
For sure. And what about reserve funds?
So reserve funds, yeah, that's the other thing is I'm speaking kind of like I had no money. I was like, if I knew I had a refi coming for $500,000, I was buying a building that needed $1 million down payment and I was going to come up with that $500 somehow. Again, if you have other things around you in your life that you're supporting, or you have a family or a partner, or you're not prepared to lose it all, you need to have reserve funds because real estate construction always goes over budget. Everyone always says that. It always goes over timeline. Everyone always says that, and it's true. So you need to be prepared for that. Additionally, I swear to God, every time with the bank deal, even when the market was good, like something always comes up where it's like, like we thought we were going to do 80%, and then 2 days before closing, actually it's going to be 75%. And like, yeah, we said we could turn around in 2 weeks. Well, we actually just got this report. We need another cost consultant to come in. So you're going to have a 4-week delay. So you got to have cash for that stuff. Like nothing works out as beautifully timed as it shows in the paperwork.
Yep.
You need to be prepared for that. And then additionally, when there's a market downturn, you need to be able to make up lost cash flows combined with, we haven't seen this and they don't really do it here because I think it's Canada can't afford it, but they could call your loan. They could say, you got to pay this thing down to renew. Like it does happen. And we did see a window of that last year where guys were putting $1 million down to keep their mortgage because they had to pay the thing down to stay on side.
Yeah.
So it's good to keep a bit of cash around. And now I try and operate like that. But I get it. If you're young and horny and you want to take over the world, go crazy. But I'll tell you, like it was a lot of stress, man. There was a lot of nights I'd just be laying in my house by myself. Like,
what am I doing?
What the hell am I doing right now? Like,
final thought, Neal. We are the Private Lending Podcast. Mm-hmm. Talk quickly about how leveraging private funds can help you scale or help assist through a project.
So all of this would not have been possible without private funds for me, simply for the fact that regular funds lend on a very set of rules, a very tight set of rules, and they say, okay, these are the 5 things you have to meet. And oftentimes, some of the best deals don't meet those rules. And that doesn't mean that they're not good, but that's why they're great deals, because nobody else can get financing on them or figure out a way to make it happen. So if you can be smart and find a good way to do it, this is where private funds can be the tool to help you get there. The speed is also extremely important because it allows you to operate quickly and aggressively. But again, you need to know what you're doing and you need to be prepared to think about your exit. Just like how they underwrite you, you need to underwrite yourself and say, how the hell am I going to pay this back? I think everyone forgets and everyone's so horny, like they approved it, I'm getting the $1 million. And it's like, that's the easy part, man. You got to pay that $1 million back. Yeah. How the hell are you going to do that? So private is crucial in doing any of the things that I said and finding those great deals. But you need to have a good working relationship and you need to understand how you're going to get the hell out of it. And you need to assume the worst on the back end. Like 95% refis. So like CMHC 95% refis. I never once ran my numbers on that because that is just psycho. I always ran it on traditional financing at 75%. And then when I got to the end and I got a CMHC refi, that was a bonus.
Yeah.
Right. So just always assume the worst and always overshoot your timelines and then budget it into your thing. That was something I learned as well. Is like put into your construction budget. Okay, I'm borrowing $1 million of private. I used to put in 10% because I could turn a building over in 6 months. So it was basically a year's worth of private. Now I put in 20%. So if you're borrowing $1 million, it's a $200,000 interest and fee reserve built into my budget to get that project turned over.
Love it. All right, just to wrap up, I'll go through some final thoughts and maybe some advice for new investors. Start small, but get started. You got to get in there at some point, and if this is your goal and what you want to do, craft the investment strategy and get into the market and find the right way to do that. Neal touched on this. Educate yourself and build your team early. That can involve, your mortgage broker partner, your lawyer, property manager, accountant. You want to have all those pieces in place and the right people in those seats. And of course, align your investment strategy with your personal goals. If you want to have one property, focus on getting that great deal for that property. If you want to build a multi-unit, focus on how you can get started there, not based on what's hot on TikTok or Instagram at that given time. And of course, just a final thought: real estate's a long game, but it's likely worth playing from our personal experiences.
Yep.
As they say, it's not timing the market; it's time in the market. Right, Neal?
Very much so.
Yeah,
100%.
Absolutely. So, Neal, that was really cool. It was kind of like me interviewing you a little bit in that episode, but really cool to go through it and take that different approach today. If you're an investor, real estate investor tuning in, let us know what your portfolio looks like or what your next move is. We'd love to connect with you and talk further. Don't forget to subscribe to our podcast and to continue learning about the Canadian private lending space.
Thanks for listening, guys.
Cheers.
Thanks for listening, guys. It's Neal, your co-host and co-founder at Keystone Mortgage Investment Corp. and Director of Investor Relations. I'm also a real estate agent, real estate investor, and business owner.
And your co-host and co-founder of Keystone Mortgage Investment Corporation, Ryan McNeil. Keystone MIC is licensed under the Mortgage Regulations Act of Nova Scotia, license number 3000844, and through FCMB, license 89280. Keep in mind, the views of this podcast are for informational purposes only and are not financial advice.